Right, chapter 9 is going to be child tax credit. It starts on page 305. Child tax credit, additional child tax credit, and other dependents credit. And we're also going to, in this chapter, if we get to it, talk about the credit for child and dependent care expenses and the adoption credit. We're also going to learn or review the difference between non-refundable and refundable credits, and then identify which of these credits apply to our clients. Okay, so first of all, do we remember what the difference between a non-refundable and a refundable credit is?
Yeah, non-refundable credit can bring your tax liability to zero. Refundable credit give you money back.
Right. So what Dan said is a non-refundable credit can reduce your tax liability, but not below zero. So if you have no tax after, like what we did in the last chapter, we looked up your tax in the tax table. If you have a non-refundable credit that's more than your tax, then you lose the rest. Or in some cases, it will carry over. Or in the case of the child tax credit, there's a second step to it. A refundable credit is treated as a payment, and even after it's paid off your tax bill, anything that's left over can be sent to you as a refund. So because of refundable credits, some people who have no withholding at all, no money is taken out of their paychecks, they still get a refund. Okay, so the first and most important credit in this chapter is the child tax credit. And there are a few requirements in order to qualify for the child tax credit. And first of all, that child has to be your qualifying child under the definition from the section on dependents. Remember, the qualifications are JARRS. Do you want to review those?
Joint
return, age, relationship,
come on, dude, you know it. Jars. What is that?
okay, I'll give you a hint. It starts with RES.
Oh yeah, residence and support.
Yeah.
Residency support.
Oops. Okay, so joint return means that your dependent is not married, or if they're married, they only file to get their refund back. Age, for the purposes of the child tax credit, is under 17. So remember, somebody could be your qualifying child as a dependent if they're under 19, or they're a student under 24, or any age if they're disabled. For the child tax credit, the age limit is 17, under 17. And that's, anytime we talk about ages, normally we're talking about at the end of the year. So if they have turned 17 any time during the tax year, they're considered 17 or older for the whole tax year.
I had to explain that to my best friend the other day. His son decided to go live with his mom, who just turned 16.
Mm-hmm.
He's like, yeah, I'm really going to miss that next year. I was like, why? He's like, the child tax credit stuff. I was like, no, dude, he turned 17 next year. No child tax credit after that.
Right.
Oh, yeah, she can keep it.
Yep. And then relationship test is son or daughter, or your descendants, brother or sister, or their descendants.
Or adopted.
Yep. Also includes adopted. Adopted is legally the same as a natural or blood relationship. It also includes foster children. Residency means that they lived with you more than 6 months, more than half the year. 2024 is a leap year, so it's going to have to be 184 days or more. If it's exactly half, that's not more than half, so it doesn't count. And support means
50% or more of the support for November to the year.
No. Remember, there's it's confusingly worded when we're talking about the support test for qualifying child. Support test says that the child must not provide more than half of their own support. So if they're providing a quarter of their own support and each of the parents are providing 3/8 of the child's support, then nobody's providing more than half the child's support. But the only question is, does the child support themselves?
If the child makes enough money to support themselves, but puts it all in savings for college, that counts.
Yes, that would count because support is about spending and it's not about income. So, yes, we have had examples where we had an 18 or 19-year-old or an 18-year-old who had earned quite a bit but had saved all that money. I think the exact case was they made $50,000. And they asked him, what did you do with that money? It's like, well, it's all in the bank because I'm going to try to go to college without any loans. Since he didn't use any of that money for his own support, he's not considered to be supporting himself.
So it's okay if these things.
Mm-hmm.
Might as well not say the kids actually need to stay longer.
Okay. The residency test is slightly different also for the child tax credit. The residency test normally says the child must live with you more than half of the year. For purposes of child tax credit, the child must live with you more than half the year in the United States. And those are two main changes. And one new qualification is that the child must have a Social Security number before the due date of the return.
I remember in the 80s when parents could not get their child tax credit unless they like that when their parents applied for Social Security number. Because they couldn't get their gains. I don't know.
Okay, how much is the credit? The credit is a flat $2,000 for each qualifying child. Unless your income is more than, I think it's $400,000. If your income exceeds $400,000, your child tax credit can be reduced.
I think I saw them. Aren't they trying to raise the child tax credit this year?
No, there's no legislation for that. There was legislation that passed the House way back in February, I think it was February 16th, where they were going to increase the child tax credit to $3,000, but the Senate had other priorities and never took that bill up. To become law, a bill has to pass the House and the Senate and be signed by the President. Okay, so here's an example where Ed and Marcy have two qualifying children, which is a total child tax credit of $4,000. The child tax credit is a non-refundable credit. So because their total tax was only $2,670, their child tax credit is only $2,670. But keep in mind, remember the difference because that will become potentially the additional child tax credit, which we'll talk about next. Okay, so the leftover, the unused part of their child tax credit is $1,330.
So with the child tax credit, there's a cap in kids.
No, there's no limit to the number of kids. And there is also no limit for filing status. So this is one of the very few credits that are still available if you're married filing separately. Married filing separately, almost every other credit, you're just not allowed to take those credits. Child tax credit is one of the few exemptions or exceptions to that rule. Like many credits, if you incorrectly claim the child tax credit or additional child tax credit, and if you turn out to be ineligible for that, then the IRS can ban you from taking this credit for either 2 or 10 years, depending on whether they thought it was merely willful, which would be 2 years, like you knew you weren't supposed to take it, but you took it anyway, or fraudulent, like you're claiming kids that aren't even related to you. You bought their social security numbers on the dark web and thought you could get away with it. Anytime you claim any child tax credit, then you will actually fill in Schedule 8812, and 8812 will also help you calculate the additional child tax credit. Okay, here we review the qualifications. So this first one is a retread of the relationship test: son, daughter, foster child, brother, sister, stepbrother, stepsister, or a descendant of any of those. Also includes half-brother and half-sister and their descendants. Remember that in the case of stepbrother and stepsister, relationships that are created by marriage continue even after the divorce or death of one of the spouses. And secondly, the child must be under age 17. So you could have a qualifying child for purposes of dependency. They might be 18 or 17, but they're not a qualifying child for child tax credit. This is a support test. The child does not provide more than half of their own support, and the child must live with you for more than half of the year, with the following exceptions: temporary absences, which is basically education, vacation, illness, military service, business. I think that's all of them. The exception for children of divorced and separated parents applies. And what I mean when I say that is that the non-custodial parent can claim the child tax credit with the permission of the custodial parent. And that's going to be 8332. Which is the custodial parent.
No, it's right here.
Yeah. So the custodial parent agrees not to claim that child, and therefore the non-custodial parent can claim that child for child tax credit purposes. If the qualifying child was born or died during the year, the half of the year that we're looking at only includes the days that a child survived or lived through. So if a child was born today, it's October 2nd now, there are something like 89 days left in the year. We would only look at, did the child live with you at least 45 out of the 89 days? That would be a majority. You must claim the child as your dependent. The child does not file a joint return. With this exception, child must be a citizen or resident of the United States or a U.S. national, and they must have a valid Social Security number. Okay, we'll skip the exception, the 8332. Again, we may have to apply the tiebreaker rules. And this reminds us that except for the case of an 8332 being signed, only one person can claim the child for all of these benefits. So you can't split them up. You can't say, you can take the child tax credit, but I'll be head of household, and then we'll let somebody else have the child dependent care credit. It's all one single bundle. And the only time you can take that bundle apart is with an 8332. And that only gives the child tax credit and nothing else. Okay. Tiebreaker rules are if one of the people involved is the child's parent, then the parent always has first option. If both the parents are involved, the child lived with both parents more than half the year, then they can choose which one of them will claim the child. But if they can't agree or they both attempt to claim the child, then whichever parent the child lived with more nights during the year is going to be the custodial parent and is going to win the tiebreaker test. If that's still tied, so the child might live with both parents. That's fairly typical when we have unmarried parents with children. Then, again, they can still choose, but if they don't agree or both try to claim the child, then it's going to go to the adjusted gross income. So the first tiebreaker is choice, second tiebreaker is number of nights, third tiebreaker is adjusted gross income. And here, if no parent can claim the child as a qualifying child, then only the person with the highest adjusted gross income can claim that child. So if a child lives with their aunt and uncle and grandfather, then only the one person in that household with the highest adjusted gross income can claim that child. Yeah, or an older sibling, yeah. This also applies if a parent could claim a child, but decides not to. Then someone else can claim that child, but only if their adjusted gross income is higher than the parent's adjusted gross income. So here's an example. Tom and Tina, they have a 13-year-old son, a 12-year-old daughter, and a 14-year-old nephew. The nephew lived with them all year because his parents passed away, and they provide all the support for all three children. So they're all qualifying children for the child tax credit. When you list them as dependents, you'll list their names, social security numbers, and their relationship to you. And if they're under 17, you check the box for child tax credit. Okay, here's where the child tax credit may be reduced. So we only have a few clients in this high income range. If you're married filing jointly and your income is over $400,000, or any other filing status and your income, adjusted gross income, is over $200,000, then your child tax credit, and this is your total credit, not your credit per child, but your total credit is reduced by $50 for every $1,000 or portion thereof that your income exceeds that threshold. So for example, if you're married filing jointly and your income is $400,001, that's one portion of $1,000 and your child tax credit is reduced by $50. They could have just made it a straight 5%, but they don't want to make it that simple. Again, that's your total credit. So if we're talking about Tim and Tina, or Tom and Tina, who have 3 kids, and their income is $401,000, they'll still have $6,000, $2,000 for each of the 3 kids, minus $50. So their total child tax credit would be $5,950. So it reduces your total credit, not your credit per child.
Okay.